Hello subscribers, today is Friday, October 15th, 2021, and this is a market recap for MasterChartsTrading.com. So I apologize, last week there was no video. Some of my friends got together, all of a sudden we went on a camping trip, and this was like a reunion after the pandemic, so I could not go. So unfortunately I had to skip the previous video, but what's really nice is that people actually noticed. So thank you for noticing that there was no video, and thank you for your likes, thank you for your shares, and let's get right to it. Today is October 15th, so we're gonna look at stocks as they approach records. Consumer discretionary fund already hit new all-time record highs. We'll look at market breadth as it improved. I'll give you an actual example of a trade for AT&T. I traded it, how to trade it, and how not to trade it. This is actually a very good example. You will notice this is a very good example. Treasury bonds are still somewhat indecisive. They could go either way right now. And same with dollar. It's kind of interesting. It could go either way as well. Natural gas hit new 52-week highs, multi-year highs, and I think it's going to be pulling back into winter, confusing all of the fundamental analysts. And Bitcoin again approaching new records, and I think it's going to head to 100,000 once it breaks out. If you are a subscriber, if you're a subscriber, then I have two more newsletters that you should be receiving. One is called Elite, where we trade various large caps, ETFs, and some forex and commodities. And also, if you have the same my subscription, you will also have access to the Speculator newsletter, where we trade the various speculative stocks, or those are just breaking out. So if you are not yet a member, consider signing up. This is S&P 500. Notice this is a weekly chart. So each of these candlesticks is a week's worth of activity. Now, you can use my indicators, Master Charts Trading Price Action Indicators, to trade on weeklies. All you have to do is just change the length to 52. So you can look at this chart on 52-week, or rather on a weekly chart. So if you are more a longer term trader, then this is a really good way to trade. Now notice that I'm gonna change this so it's a little bit more bright and more bigger. So the blue line, so very important to my system, is this blue line. The blue line indicates that we are, once it closes above the blue line, that means we are in a bull market. So on the weekly basis, this is what happened here the week of 18th of May 2020. We had another opportunity to buy right there 15th of June 2020, and since then really we didn't have any good opportunities. You can see we just took off. Now when the stock goes up and then comes down below this green line, you can see there's this thin green line. This is where I usually take profits. So for example, I would have taken profits right there on the 7th of September and again on 26th of October 2020. And since then, really, there was no need to take profits, because there was no close below the green line. And obviously, we didn't even touch the blue line. That means that we should keep this position open, basically, from back in April of 2020. Right now, we are very close to all-time record highs. So we are very close, and I'm gonna change this to daily, so we're gonna have two charts to look in, and daily charts and inputs 250, so 250 days worth of activity. So we can pretty much see the same general picture for daily chart. This is a daily chart of S&P 500, and this is a weekly chart of S&P 500. You can see we're still above this green support resistance line, which is at 4327, at around 4327. So making a new record will be very, very easy. Looking at Dow Jones is like basically at new records. We're right there. So once again, this is a weekly chart. We can look at new, price approaching the new all-time record highs, very close for Dow Jones. Dow Jones is leading the market higher. Here's Dow Jones and daily charts approaching all-time record highs as well. Okay, good. Moving on to Nasdaq QQQ. So again, this is a weekly chart. I'm kind of looking at different setups, and weeklies actually look pretty good as well. If you have a more of a longer term kind of mindset, I guess. The latest opportunity once again was back in 2020. You can see this up arrow, April of 2020, and maybe as late as May of 2020, but that was about it. And since then you can see there was really no opportunity to get in. Strong support again is at the blue line, but we haven't even gotten there during this pullback, so it is unlikely actually that we're gonna get there. Most likely we're gonna make a new record high once again. So this is showing just incredible resilience of the stock market. Here are the small caps once again on the weekly, so I guess we're gonna look mostly today on the weekly chart. So notice this up arrows. These are actual alerts back in April, June, or the May, June of 2020, and the latest opportunity right there on 21st of September, again to get in on the long side. But other than that, there was really no good opportunity. So we are super close to new all-time record highs. We could also try to project into the future. So here's the small caps, and I have a new version, 6.0 version, which works on daily charts. I'm still working on it, and it's for some reason doesn't work on weekly charts. But looking at this chart, we can see that we can project the price action into the future on daily charts. And notice that this blue line is kind of moving up. So this is December levels of 2021. So this is projected into the future. This means we're tightening of the trading range. So the trading range is going to get tighter. What does that mean? That means that the stock can move towards bearish levels much easier. So I'm going to show you what I mean. So right this instant, to get to the bearish levels, it will take a huge amount of effort. See, it's going to take 27% move lower. However, in the future, if the price just kind of trades sideways and does nothing, you can see that to get to the bearish levels actually would not take that much effort. It would take 12% of the effort. So we're looking at tightening of the trading range, and we'll see where this takes us. This tightening will be maximum right there around 10th of December, right there. So in December. So unless we make a new record, we're going to be looking more closely at the small caps and see where they're gonna go. This is an important development, so we need to be watching it. And here's XLY. So XLY I'm gonna show you on the first on the weekly chart. So here's the weekly chart of XLY. So what is XLY? XLY is a fund called Consumer Discretionary. So Consumer Discretionary Fund consists of stocks which are very sensitive to the economy. You can see that I put in top 10 stocks here. They're very common stocks. Amazon is a huge number. Tesla, Home Depot, McDonald's. So all of those things are kind of what we call it discretionary income. So you're not gonna go to Starbucks if you have absolutely no money. You need it's discretionary income. So in other words, you will, if you are very poor, you will try to conserve money and not go out. So this is showing that we are actually in excellent shape economically, because notice that this is the first of the major sectors to hit a new all-time record, and notice how strong this move was. New all-time record high. So once again, the latest opportunity was over a year ago on May 4th, 2020, and you can see that we trail at the blue support resistance, and it has not yet been hit. So we just continue to advance our stop. So in case the stock will now collapse, we will still make a hefty profit, because we bought at around 116, and at worst we'll close at 170. You see, so that's a nice profit. This is really good news because again, this is a very economically sensitive sector, and if this sector is making new records, that means it's actually a very good sign. Okay, so next is AT&T, and this is an actual trade, and I'll show it to you in just a second. But before we get there, I wanted to show market breadth. So market breadth, why do we need to know about market breadth? So market breadth shows the participation of the stock market. So let's say just a few of the stocks, for example, here we can see that Amazon is 21% of this fund. So let's say Amazon is pushing higher, but the rest of the stocks are actually pushing lower. But even though vast majority of the fund sector is pushing lower, one or two stocks at the top that are just enormous can lift the price higher on average. But the breadth, how broad is the advance, is actually quite weak, because only a few stocks would be advancing and the rest would be declining. So with this measure, NYAD, so to get this measure, you gotta go to StockCharts.com. You do not need an account. I'm not even logged in. See, I'm not even logged in. So type in the signal $NYAD, and then change this type where I'm hovering to cumulative, because it usually goes as candlesticks. If it's a candlesticks, it will be gibberish. It'll just look like that. We don't want we want it cumulative. Cumulative means we add the yesterday's number to today's number. Then this number becomes meaningful. So right this instant, we can also put a price of S&P 500 on the bottom here. So you can see that we didn't really make a new record for percent. So advances minus declines. So how many stocks advanced and how many stocks declined. And we're going to take the declines and subtract them from advances, and we're going to generate a number. And we're going to take that number and add it to yesterday's generated number. And then we'll get this line. So you can see that we made a new high right there in July of this year, but then since then we really have not yet made a new record high. So ideally we should make a new record high. That would imply that the advance is indeed broad. Another measure of the breadth is advances less declines volume. So this one is pretty obvious. You can see that we made a new record right there in June of this year, and since then the volume has been decreasing. So overall, we're still waiting for the S&P for the volume and the advanced decline issues to make a new record. This would be ideal, and most likely at that point small caps would make a new record, because there are so many small caps, and once they make a new record, I think the advanced decline, at least advanced decline issues would improve, and they're not that far off. So for now, there is still a divergence. In other words, stock market is going higher, but the breadth is not confirming this move higher yet. So that means that most likely the largest companies are pushing higher, while overall on average the stocks are either flat or slightly down. Will this change? We'll see in a few weeks, but it's been going on since June, so we can easily see a few more weeks to a few more months of sideways action. Okay, so let's look at AT&T, and this one I'm actually gonna go to daily. It's because I actually traded it, and I want to show you the trade. So back in March of this year, I went ahead. So it's kind of obvious, right? So these lines are math. This is just mathematical lines. I don't actually draw them in. So the math calculates this out, and then I look at the stock and I say, okay, does this look good or not? And back in March, April of this year, 2021, I'm like, oh, this looks good. This looks like a new breakout. So in other words, this stock AT&T made the new lows. These are new lows back here. And then started breaking out, started moving higher. So it actually moved higher above the blue support resistance line right there. And this is where I bought it. I bought calls. So I'm expressing my bullish sentiment by buying call options. So call options means that I am betting that the stock price will go up. So I bought at the time $30 call options, and the price was about $30. So it was at the money call options expiring in January of 2022, so in a few months. And so this was in April. So this was about 9 months out. I bought options about 9 months out. And so I bought them right there on April 5th. And I'm sitting there, and then, it gapped up in my favor right there on 22nd of April and continued higher. So here on the 12th of May, I went ahead and I sold about a quarter of my position. So I bought them at $1.98 each on the 5th of April, sold them at $2.77 each in May. So this is already a nice profit. Then for some reason right there on 17th of May, I think there was some sort of an announcement, enormous candlestick. So notice that at the open the price gapped up, but then throughout the day it just sold off and it closed at the bottom. And I did not like the way this is looking, because this is a clear, what would be called an outside reversal. So this is a bearish engulfing pattern. So we had a previous candle right there on 14th of May, completely engulfed by the 17th of May candle. I went ahead and I closed my position at 260, so it was still a nice profit overall. But notice what happened the next day. It gapped down. So if I did not close this position on 17th of May, on 18th of May, I would have been in the loss. So I'm actually quite happy that I closed the position here. As we continue forward, we can see that it continued lower, and we're now in caution phase below this red line. So the red line means caution, get ready to exit. But I already exited, so for me it actually doesn't matter. But for some reason people do not, heed my advice or my ideas, and sometimes they just sit there and say, oh wow, it might go up. Or it might not. In this case, actually didn't, and right there on 19th of August I sent an alert to avoid it. I would avoid it completely. So in other words, if I had a position, I would close it even if it means at a loss. And actually it was a very smart decision, because a few weeks later, notice what happened. And we can actually see that the loss is already about, almost 10% bigger than if I exited right there on 19th of August. I mean, it could bounce and all that, but overall, obviously this is in a bear market now, so we're going to be thinking to, either do nothing with this stock or potentially sell it short. But I don't want to be selling short during the general bull market. So overall, I just do nothing if the stock is in a bear market. But what this is showing you is you gotta kind of like time it. You have to be able to quickly get in and get out of the positions, and don't really worry about too much about other people's opinions, etc., etc. So just get out, where you are preserving your profits, and later on, you can always re-enter should the opportunity arise. Also, there are many different stocks to trade, so don't worry about losing a position. You can always open a new one. What you cannot do is you cannot recover your cash once you have a loss. And you need to really work hard. So this is just showing you that, honor your stop. So when it says avoid, that means you need to get out. Okay, otherwise your loss might get a lot bigger. All right, continuing to the bond universe, here's Treasuries, TLT. So Treasuries, I think, is in a downtrend. So the downtrend began right there on the 6th of January. We had an opportunity to sell short again on 27th of January. Latest alert, latest opportunity to sell short. So there's one right there on the 9th of July, and I sent two more alerts right there, one on the 29th of September, one on the 5th of October. Now, so far the selling has been somewhat muted, not very pronounced. So if we project the price action into the future, you can see that the the indicator lines are kind of coming down towards this towards the price action. So it would not take a lot of effort now for the price to come up to the blue line. It's only like 2-3% away. If or when the price for Treasuries TLT comes up to the blue line, which is currently around 150, and if it closes above it, it would imply that the market has turned. Right now I am thinking that Treasuries are going to continue going down, but if they close above the blue support resistance line around 150 currently, I'm going to start thinking that the price will be going up. So at that point we will reverse our thinking and start buying Treasuries. But for now we're actually still shorting Treasuries. We'll see where this takes us. Here's the TYX, so 30-year Treasury bond yield, and you can see it's breaking out right there. So there's the breakout. Or rather, it already broke out. It just needs to, it continues its uptrend. So the original breakout for Treasuries, you can kind of see it right there. It was on 6th of January, yes. Like I said, January 6th, insurrection. This is when the Treasury yield broke out. In other words, the bonds broke down. So we're still watching it. We're still trading it. I still think that Treasury yields will continue higher. In other words, the bonds will get sold. All right, and let's switch gears. Now we're looking at the dollar index, DXY. So I think dollar currently is in a bull market. So I actually had a position. I bought calls. I bought call options on UUP. So UUP is a what's called a US dollar bullish fund. Now they don't really move as much as I was hoping, so I bought them at 44 cents each on the 16th of September, and you can see this, the move was quite significant. but the option moved not that much, so it only moved 10 cents. So I sold a quarter right there on the 29th of September, and then I just did not like this action here on 13th of October. Went ahead and I closed my position. So overall, still a nice profit, about let me see, so 50, about 52 cents each, and I bought them at 44, so about 18%, 20% profit. Still, hefty, nice profit, but not as much. If this was a stock and not a dollar index, I think it would have been a bigger profit. So I'm just not sure that I'm going to be trading UUP in the future. I just didn't really like it that much. But overall, I still think that dollar is on an uptrend. So by extension, I think gold is on a downtrend. So latest, you can see downward facing arrows. I think that we are in a downtrend still. However, this candle right there on 13th of October, I'm not so certain anymore that we're in a downtrend, but today was actually a signal as well. So we'll see what happens. I want to just kind of watch it for a little while, watch gold and dollar for a little while, and see which way we're going to turn. It's not terribly, it's somewhat difficult to read right now. It's not a very straightforward chart. So let's see what happens. Let's see where it gets us. Looking at natural gas, this is a killer trade. So again, if you got in, congratulations. Let's look at it actually on weekly. It kind of looks really beautiful on weekly chart. And there it is. So weekly chart. So there it is. So the breakout into the bull market occurred right there for natural gas on 10th of August, week of the 10th of August. And had multiple opportunities to sell, rather to buy. And several, opportunities. I sent out several alerts. Hopefully you got in, but the latest one was just killer. On the week of April 12th, right there, it was just a home run trade. If you got in, that's 140% move. So it went from 260 to about 640. Currently, it seems like we're topping out, so I'm gonna zoom in on this price action. So this is clear, the week of 27th of September and the week of 4th of October. These are clear shooting star candlesticks. So price came up, but the bears came in and sold it. So right now we have a red candle, which is actually a bearish engulfing as well. Following a shooting star. So this is a shooting star with a confirmation. Most likely we're gonna continue pulling back. I don't know where to, but a logical target would be around 488 at least, and see what happens there. I think we're gonna try and bounce there, but overall this is somewhat overextended. So when I read this, just panic, total panic. Oh, the natural gas prices are skyrocketing. What is going to happen in the winter when it gets cold? Well, I think when it gets cold in the winter, in like December, January, we're going to see something like that. So the prices will actually come down. Projecting here the price. So this is a blue line right there, about 480. So I'm thinking in December, January, we're going to be there. I doubt we're going to continue higher from here. I think we're definitely overextended. But if you got in, congratulations. I would definitely be taking profits at this point. And Bitcoin. So again, this is a weekly chart of Bitcoin. You can see that on weekly chart actually there is less whipsaws. So this downward facing arrow is a it was an alert, to my subscribers, but it actually, I'm gonna show it to you on the daily chart. It actually wasn't visible, so there it's like right there, 12th of July. See, you can see that we actually did not close below this red support resistance line. We kind of bottomed there. So sometimes weekly charts are even better, but on occasion you will miss an opportunity, like for example right there where I'm hovering, in January of this year. The price didn't really reach the blue line, but if you look at the daily chart, you can see that there was an opportunity. So daily charts are great, weekly charts are also great. You just need to kind of, I don't know, understand which to use at what point, right? So like there's another opportunity to sell short right there, 21st of September, but I decided not to take it really. And the latest alert was right there. Actually, it was already successful. So I'm gonna go to daily charts again, and I'm gonna show it to you. So there it is. There's the latest opportunity, 6th of October, and we're already coming up to the breakout towards new all-time record high. So new all-time record highs are at 65,000 or so. I think if we break out above 65,000, we can easily go to 100,000, possibly more. That's it for this week's recap. Again, I apologize about the last week. Head over to MasterChartsTrading.com. One word, MasterChartsTrading.com. Click on products and sign up one of the products. Trading indicators are these lines. So again, you can use them on daily, weekly charts, monthly charts. Also, you can also trade intraday. Like for example, this is a Bitcoin, so you can go to 5-minute, whatever, 5-minute chart. You can trade on 5-minute chart as well. For example, right there, you would be buying any time frame. If you're trading continuous security, you can trade on any time frame. Continuous security meaning things like Bitcoin or Forex or gold, actual Forex, gold, not the GLD ETF. But I prefer to trade on daily or higher, daily or weekly charts, and I think it's much easier to trade on those charts. So last year, made 20%, some obscene amount. You can see very large profit. This year about 45% so far on closed transactions, so not too bad. So that's the trading indicators. This is basically what I use to trade. If you want to sign up for indicators and newsletter, so again, you can get elite newsletter and speculator newsletter. So this is where we talk about various stocks, and I actually show them and send out alerts about these various stocks. Ultimate Bundle adds in a stock screener, so you can find the stocks that you're looking for. You can scan any of these lists, and you can see that there's quite a bit of stocks within them, and you will get this many alerts per day, so quite a bit. Now for the Speculator newsletter, I use this list, all stocks with options, and we go and we look at various stocks that are optionable. Now I will have more. We're working on adding what's called market breadth index. So it will use my lines to generate a market breadth signal. So in other words, how many stocks are above the green line, how many stocks are above the blue line, how many stocks are above the red line, etc. How many stocks are in an uptrend, how many stocks are in a downtrend. And this market breadth index is coming shortly. We will be able to even further refine our entries. And the most important thing is to market breadth index. I think we should be able to help us answer the question: should we even be buying or selling? So it's more of a general question, and it's coming. It will be part of the ultimate bundle. So if you sign up now, most likely the prices will go up again. But if you sign up now, then I will keep the price as it is currently. So sign up before the prices go up. All right, again, thanks for watching. Hit the like button and have another great trading week. Bye bye.